Well into this deep dive. Today, we're really going to unpack some expert analysis. It's called Global Market Insight, today's trends and next week's watch list.
That's right. And our mission here is pretty straightforward. We want to sift through all the market intelligence and pull out the really important stuff for you.
Yeah, give you that shortcut to understanding what's moving the markets.
Exactly. What are the key sector trends, any big stock stories, and crucially, what events you should, have on your radar.
We're aiming for those insights that make you feel informed, but hopefully not buried in data.
Precisely. You should walk away feeling smarter, not overwhelmed.
Okay, consider this your guide then. We'll make this financial info clear, maybe even relatable for you. Let's jump in. So to start us off, maybe give us a snapshot. How did the different global markets actually perform? Let's start with the U.S.
Okay, the U.S., well, it was genuinely varied, actually. You had the Dow Jones. It managed a small gain, up 0.2%.
Okay.
But the Nasdaq slipped 0.5%, and the S&P 500 was just slightly in the red.
So tech was underperforming.
Yeah, you can see the sentiment there. Tech stocks are definitely feeling some pressure. Investors seem pretty cautious, waiting to see what the Fed does next.
Right, the interest rate question looms large.
It does. And there's also this growing chatter about stretched valuations, particularly in AI and cloud stocks.
Meaning prices might be a bit ahead of themselves?
Sort of, yeah. Running ahead of current earnings or maybe the underlying value. It's that classic tension between future potential and today's numbers.
Got it. So a pretty nuanced picture in the U.S. then. How did things look over in Europe? Was it a similar story?
Europe, well, I had a different feel. The FTSE 100 in London, that gained 0.4%, and Germany's DAX was up 0.6%.
Oh, interesting. So more positive there. What was driving that?
Well, the really fascinating piece there is that Eurozone inflation seems to be cooling off.
Okay.
And that's leading investors to think, or maybe hope, that the European Central Bank, the ECB, might start cutting interest rates later this year.
So that expectation is boosting sentiment.
Exactly. Though, the timing and the pace of those potential cuts are key. Markets are pricing in a certain scenario. Any surprises could cause some jitters.
Understood. Okay, let's shift over to Asia Pacific. It sounds like it was mixed results there too. What stood out?
Yeah, definitely a mixed bag. You're right. Japan's Nikkei, it had a strong day, jumped 1.1%.
Driven by?
Mostly tech stocks, actually, following some of those global trends.
Okay.
But then you look at Hong Kong, the Hang Seng dropped 0.8%. It's still showing that weakness linked to China's real estate problems.
Right. That continues to be a drag.
It really does. And the Shanghai Composite was basically flat, just kind of holding steady.
Okay, so we've got these regional snapshots, but stepping back, what are the big overarching themes driving all these movements right now? This is where it gets really interesting for you, the listener, trying to connect the dots.
Absolutely. If you zoom out, there are, I'd say, three main drivers really dominating the conversation. First, as we touched on, interest rates. Both the Fed and the ECB are being very cautious. And, well, everything hangs on their next words, practically. It affects borrowing costs, investment, everything.
Okay, number one, interest rates. What's second?
Second is AI and tech growth. It's clearly this huge long-term opportunity, right? Transforming industries.
For sure.
But like we saw with the Nasdaq's dip, it's also causing short-term volatility. Investors are constantly reassessing those, sometimes very high valuations.
Makes sense. Opportunity, but also risk. And the third driver?
Third is geopolitical tensions. Specifically things like the U.S.-China trade relationship, which seems to always be simmering, and the ongoing uncertainty in the Middle East.
Right, those external factors.
Yeah, they add this layer of unpredictable risk, affect supply chains, commodity prices, you name it.
So with those three forces, rates, AI, geopolitics swirling around, how would you actually characterize the market mood right now? Is cautious but active still the right phrase?
I think it is, yeah. Cautious but active still feels about right. It means investors. They see the risks, inflation, geopolitics, all that. But they're not just hiding. They're still putting money to work, just maybe more selectively, looking for specific growth stories or value rather than just buying everything.
Okay, selective engagement. That makes sense. Let's drill down into sectors then for you listening. What's actually doing well right now and what's feeling the pinch?
Okay, sectors. Looking at recent performance, the strong ones are pretty clear.
Yeah.
Semiconductors, obviously fueled by AI.
Can't escape AI.
Nope. Then defense and aerospace. Unfortunately, that often gets a boost when global tensions are high. And then selective parts of oil and gas, benefiting from, well, stable demand and pretty disciplined supply.
So those are the pockets of strength. What about the weaker areas?
On the flip side, consumer discretionary is looking weaker. That's things people want but don't necessarily need.
Yeah.
Very sensitive to inflation hitting spending power and higher interest rates.
Okay.
Real estate is still under pressure, and you have to mention China's property sector specifically there. It's a big drag.
It's still a major overhang.
Definitely.
Yeah.
And finally, those meme stocks or retail hype stocks,
Right.
the ones driven more by online buzz than company fundamentals, they've seen some notable weakness too.
Right. The excitement may be fading a bit there. Were there any specific company names making waves today, big movers that you should know about?
Yeah, a few key ones. Nvidia and TSMC, the chip giant, they're still really leading the charge in AI. Hard to ignore them.
The infrastructure of AI, essentially.
Exactly. On the other hand, Tesla actually slipped a bit today. They released some weak forecasts and, well, investors noticed. It's a reminder that even the big names get scrutinized if growth seems to slow.
Good point. Anyone else on the radar?
Well, looking ahead slightly, keep an eye on Nike. Their earnings are out next week. That'll be a really interesting indicator for global retail health. You know, how consumers are feeling worldwide.
Good one. A bellwether for the consumer. Okay, so that brings us to next week. What does all this market action mean for you, the listener? What are the really crucial events you should watch?
Right. Looking ahead, there are several things next week that could really shift what we call risk appetite. Basically, how willing investors are to take chances.
Okay, what should be on our checklist?
You'll definitely want to watch for the U.S. GDP data, the economic growth numbers, and the latest jobless claims. Gives you a read on the U.S. economy's pulse.
Got it. U.S. economy check.
Then over in Europe, the ECB meeting and press conference will be huge. Everyone will be parsing their language for clues about future rate cuts.
Okay, ECB in focus. Anything else?
Yes, earnings season continues. We mentioned Nike, but also watch for reports from other big names like Samsung and Accenture. These can move whole sectors.
Right. Company performance gives real-world insights.
Absolutely. They provide valuable clues about specific industries and broader economic health.
So quite a bit to track next week.
Indeed. But, stepping back from the week-to-week noise, despite all this uncertainty we've talked about, I think staying disciplined is really key.
Disciplined how?
Just sticking to your long-term plan. Because what's really compelling, I think, is that the big long-term trends, especially things like AI, the shift to renewable energy automation, they still look remarkably strong. They're gaining momentum, really, regardless of these short-term ups and downs.
That's a great point. Focusing on those underlying shifts, it really ties things together. Don't let the daily headlines completely distract from those fundamental changes happening.
Exactly.
Okay, so as we wrap up this deep dive, here's something for you to maybe chew on. How might the continued strength of these big trends, AI, energy, automation, how might they fundamentally reshape things? Not just markets, but maybe aspects of our daily lives, the global economy, potentially in ways that go far beyond these short-term market swings.
That's a big question.
It is. Something to mull over. We encourage you to think about it, maybe explore it further. Thanks so much for joining us for this deep dive.